for more on that, I want to bring on Ken Moraif, Retirement Planners of America Senior Partner here, joining us once again. And Ken, we'll just dig into financials here because I know it's one of the sectors you like. As Jared was pointing out, the second weakest performing sector today. On the year, it had been the second strongest performer before real estate just recently knocked it off that podium. Talk to me about what you like so much about financials for the back half of 2021.
Well, as long as well, first of all, thanks for having me on. The financials are going to perform well, I think, as long as we have low interest rates. I mean, money is almost free right now. And we also have a supply-demand mismatch. So as long as we have the situation where we see the economy continue to grow to satisfy the demand that we have, we're going to also see that free money be borrowed a lot, and financials are going to benefit from that. You know, with our clients, for example, we've seen a lot of people wanting to buy, their second home or their boat or whatever, and all that kind of stuff is being spurred by these very, very low interest rates. And of course, who provides the loans behind that are the financials. So I think that has not ended. As you said, it's been underperforming today, but I think through the rest of the year and into next year, we should see continued appreciation in the financial sector.
Talk to me about your positioning in your portfolio here. I mean, we've talked so much about sort of the volatility that has come out of uncertainty around the trajectory of the economic recovery, but also around the disruption the Delta variants are likely to cause. I mean, how do you position yourself for returns, but also less risk at a time of so much uncertainty?
Yeah. So again, the people that we work with are people who are over 50, who are retired or retiring soon. So our view of the world is more defensive than perhaps people who are younger. Our goal is to preserve our clients' money and have it last as long as they do or longer. And so for us, diversification is the key. And as diversification, but also with a defensive strategy built into that as an overlay. So we actually have a defensive strategy. We call it our invest and protect strategy. Essentially, it's a form of a stop loss. It's a proprietary stop loss. And it told us to get out, for example, before the 2008 credit crisis, market crash, and last year before the pandemic, before the big crash came from that. So diversification is key. We don't concentrate because of the nature of who we work with, but also protecting on the downside is important. I don't see, having said that between now and maybe even a year from now, that we're going to have to exercise any sort of defensive strategies. It looks to me like with the lower interest rates, the very low interest rates rather that I was just talking about, and the growth in the economy as the demand is so high and the supply is so low, and as that demand gets filled, I see profits for companies going forward, and therefore I don't see a bear market or a recession coming anytime soon.
Ken Moraif, Senior Planner at Retirement Planners of America. It's good to talk to you today. Great to have you on.